Good evening, guys. How are we all doing? I hope we are all good. So I just wanted to add a few extras on the psychology of trading. So trading basically it's 80% psychology and 20% strategy. You should know that you can actually have the best system, but without the right mindset, success is actually very, very impossible. The market constantly tests your patience, discipline, and emotional control. Winning traders master their emotions while losing traders let fear and greed control them. So some of the key psychological challenges in trading, I'll just like be stating them and explaining a few things. So key psychological challenges in trading, number one is the fear of losing. I feel like personally for me, when I started trading, the first thing I would be scared of was losing. And until I overcame that fear, you should know actually that on the other side of fear, that's where your profitability is. Let me just put it that way. On the other side of fear, that's where, excuse me, that's where your profitability is. So, as a trader, fear of losing, avoiding trades or cutting winners too early due to past losses. This affects most of beginner traders. So, if you're in a trade, if you're in a winning trade, the best thing you can do for yourself is to just let the trade run. If you can, the best thing you can do is to actually um, put your stop loss to break even. As soon as you trade moves like halfway towards your target, you want to like push or move your stop loss to break even. Then just let the trade run. Because if you notice, I'm not sure if you guys have gone through this phase before, whereby you enter a trade and it's in loss, but you are holding that loss for like 1 hour, 2 hours, 3 hours, 4 hours, 6 hours, the whole day holding your loss, price keeping you captive. I'm sure you attest to that because I also passed through that phase whereby you would enter a trade in the morning, especially like on deriv, on synthetics back in the day. Enter a trade at 8 in the morning when you wake up, you enter at the wrong place. That trade ends up keeping you captive the whole day. You're not in a good mood. You keep checking it, it's still red. 6, 8 hours, you eventually close it in the evening, or your account eventually gets blown just by holding a loss. But when you enter into a win, as soon as one candle turns into your profits, you want to close that trade. Why? Why would you do that? So all I can say, on the other side of fear, that's where your profitability is. So the key psychological challenges in trading are your fear of losing, number one. Number two, greed and over trading. Usually, as traders, we chase the market, we risk a lot, and we don't take profits when we are supposed to actually take profits. So to fix this, remember, do not force trades, do not chase chase price, like what I always say. So if you're on your charts, the only thing which will help you not to chase price is just look for setups which happen on the 13 EMA, whatever time frame you're looking at. Anything which is far away from the 13 EMA, just know if you are trading something which is far away, that's greed. That's greed. You're trying to chase price. Then also you end up risking a lot, over leveraging instead of having calculated risk. You risk a lot. So to fix the risk, what I would say is have a fixed risk. If you're trading on synthetics, trading on currencies, if you're going to risk $10 for every setup you have, for every high probability setup you have, make sure each setup you are risking $10. Do not change. Today you risk 5, tomorrow you risk 25, the next day you risk 40, the next day you risk 60, the next day you risk 20, next day you risk 15. It's hard to track your progress if you don't keep your risk parameters the same. So always make sure your risk variable is the same amount. If you're trading prop firms and you're using percentage form, same thing. If you're going to risk 0.5, let it be 0.5 throughout. If you're going to risk 2%, let it be 2% throughout. If you're going to risk 1%, let it be 1% throughout. Don't say today you're risking 1%, tomorrow you are risking 3%, trying to over leverage. The next day you are risking 0.5. That only messes up with your learning curve and your equity curve as well. Your progress cannot be calculated. All right. So another psychological challenge usually is a revenge trading, whereby trying to force trades after a loss to get back into the market. So most of the times we enter into a trade at the wrong point. Because you enter at the wrong point, the price will actually take you out, hits your stop loss. Maybe your loss was not calculated. Then what ends up happening is soon as you hit a loss, because it's not calculated and because you were not ready for it, now you want to revenge trade. Again, you're entering at the wrong spot. Maybe you're increasing your risk on a trade. That's also one of a key psychological challenge which most of us face. So to beat that, all I can say is again, wait for price to come to you. Wait for price to get into your point of interest. Once your price gets into your point of interest, execute the trade with the calculated risk. Either the setup plays out or it doesn't. If it doesn't, that's it. You're done for the day. If your risk was split into two for the day, let's say, for example, you were looking forward to trade like, let's say, your risk is what? Let's say $20. You split it into two. So instead of risking $20 on one setup, you're now risking 10. So this allows you to have two chances now to trade. So instead of chasing price, what you do is use the first risk or half the risk, enter into your trade. If it's a loss, take a breather, take a moment, take an hour away from the charts, calm your emotions down, then come back, look for the next best setup, then execute. If you are trading both sessions, let's say London and New York, same thing, split your daily risk into two. If your risk for the day is $20, $10 in the morning, $10 in the afternoon. If your risk is 1%, 0.5% in the morning session, 0.5% in the New York session. Just like that. That's how you can actually uh, fight against revenge trading. The next thing is lack of discipline, ignoring your trading plan and making impulsive decisions. What I would say is, you see, with trading, you need to treat it like a job. You need to treat it like a job, right? When you're going to work, they'll tell you be at the office by 9 o'clock in the morning. You come to the office at 5 past, they're going to give you a written warning or a verbal warning. Do it 2 times, 3 times, you get a final warning. Do it 4 times, you get fired. You lose that job. Why, as a trader, don't you treat your trading account as your business? Set yourself rules. Okay, I'm a day trader, so I'm free in the mornings and I can trade London session. Only come to the charts for London session. When London session opens 30 minutes before, you're on the charts scanning for setups. When London session opens, check for setups. Be patient for price to get into your point of interest. Then actually execute your trade. Sometimes it's as easy as that. Following your trading plan. Okay, I'm not taking a trade unless I see a pin bar or any of the candles I mentioned form on the H1 on the 13 EMA. I'm not taking a trade until I see a liquidity sweep. Write those rules down. Read them to yourself on a daily basis, right? Have your setups, write your rules, have your setups. If you take a trade, you see like these screenshots I'm showing you, these are what we call flashcards. These are past setups. From these setups, we can actually formulate a lesson. There's a story to tell with every price action or with every day. There's always a story to tell. Price is fascinating. Once you get to understand it, this trading thing is so fascinating. So you want to set yourself some rules. Once I get into my trade, at what point do I move my stop loss? You need to know all those things. At what point do I add into a winning trade? At what point do I scale out of a winning trade? At what point do I close my trade if it's running in a loss, even before it has hit my stop loss? At what point do I do this? At what point do I do that? These are all the rules you need to actually come up with. Once you've got your set of rules, you'll see that trading will become a little bit easier. If you still have losses, you have losses, but they will be coming while you're following your trading plan. It's actually better for you to lose while you're following a plan than to lose randomly. Because once you start losing randomly, it messes up with your emotions and you end up blowing an account. So always have a set of rules. Write your rules down before and after. On the weekend, what do you do on the weekend? Do you dedicate at least 1 hour for your charts? Backtest the whole week, how the week moved based on what you trade. Mark on your charts what you are anticipating for the next week. Mark your points of interest. When price eventually gets there, see how they react. Sometimes you don't even have to trade. Just mark your charts. Even in the morning, mark your charts. Okay, you mark your charts, you put a notation. Okay, at this price point, if we get here, if I get this, I'm going to do this. Or just put lines on your chart sometimes. See how price plays around those levels. That's how you actually come up with a strategy, even for yourself. That's how you can actually come up with a strategy. So have a trading plan. Treat your trading account and your trading as a business. Remember, this market is more than 6 trillion US dollars circulating on a day. And you think you're just going to come and walk to the charts randomly at like maybe let's say what at 8 p.m. and open your phone and click a buy. That's where most people get it wrong because trading is easy like that. Getting into the market, you just have to press a button. That's where most people get it wrong. So by pressing that button without a plan, you are risking your capital to losses. That's all I can say for this. So have a trading plan, formulate a trading plan, plan your trade and trade the plan. That's all. Before you trade, you want to plan. Then when the market opens or when you come to your screen, you want to trade whatever you planned. Do not start looking at other things when you were saying, okay, today I'm just going to look at Euro JPY. Then you start opening Bitcoin because someone is trading Bitcoin and making money for that session. You didn't plan to trade Bitcoin, but you're opening a Bitcoin chart. Why are you doing that to yourself? So I would say just stay true to yourself. Um, Regulate your emotions. If you come to the charts and you're not feeling well, rather don't trade. Mark your charts, just watch price, don't trade. If you've had an argument with a family member, be it your kids, your siblings, your husband, your wife, do not trade. Why would you uh risk your trading account to such negative energy? Because remember, even when you have a bad day at home and you go to work, people will be asking you, are you okay? You look like you are grumpy or such and such. Why do you look low? It's because the energy is contagious. So if you bring the negative energy to your trading charts, one thing is for sure, you're not going to have a profitable number one. You're going to have losses which are going to further upset you for that day. Then you're going to go back home again. You're going to be more stressed. That doesn't help you with anything. So I would say clear your mind. If you see if your mind is not right, do not press any buttons. If you are addicted to the charts or if you come to the charts and you want to trade, just mark your charts. Don't place any trades. Rather convert or check your demo and place your trades on demo and see how that works out for you. All right. So try to protecting your capital is the main job you have. Protecting your capital is the main job you have. So always protect your capital, come with calculated risk, use the same risk every time you trade. Right. So again, impatience, forcing setups instead of waiting for high probability trade. People want to come to the charts. I'm a day trader. I trade New York session. I come to the charts when New York session opens. Let's say I come to the charts at 3 p.m. GMT plus 2. That's when New York session is open. I'm already, my fingers are itching. I want to press a buy, I want to press a sell. That's not how you trade. You want to plan the trade. Plan first. Okay, if my price gets at this point, because maybe we've got equal highs or equal lows, I'm waiting to see a liquidity sweep, then a market structure shift, then price retracing into an order block, retracing into a fair value gap, retracing into the 13 EMA, and giving me such and such a candle for me to execute. Have a plan. Don't just come to the charts and say, okay, I trade at New York, so at 3 I'm supposed to be pressing trades. Sometimes we come to the charts, we sit, we mark our zones, we wait 2 3 hours, the setup happens maybe 3 hours into the session. And when you wait 3 hours, usually you set up, you enter, you'll be done, excuse me, you'll be done in 30 minutes, the trade is done. It's different from someone who has come to the charts at 3 and they're already pressing buys and sells. Risk is not calculated. They end up having a loss which they did not plan for, end up chasing price, end up over leveraging and over risking, trying to gain back what they lost. They end up blowing their account. So try to be patient, try to have a sound mind. Do not force any trades. Be patient for your setups to form. Be patient for your price to come to your points of entry or points of interest for you to actually execute a high probability setup. What I would say is, excuse me, if your setup is not high probability, do not take it. Rather, just watch how price will play for that day, leave it. Come the next day, wait for a high probability. If still there's nothing, it's okay. 2 days, no trades. Trust me, when you eventually get a high probability trade, it will cover for all those days when you didn't actually trade. So, how do you strengthen your trading psychology? These are just some of the points I've been mentioning. Have a trading plan. Stick to defined rules for entries, exits, and risk management. Also have emotional detachment. See trades as probability, not personal wins. On this point, you see when you're still taking your trade and you're so happy when you after you win, that happiness, that's your adrenaline shooting up. Right? Trust me, after your adrenaline is up, if you is up after you come back to the charts and you want to win again, you feel like you are a guru. The next trade is going to be a loss. How many times have you taken a win and you're so happy, you come back, you want to continue trading or even come back just on the next day and you hit a big loss and you get so frustrated, you get so angry with yourself. Like if you look at the trade you took, sometimes you ask yourself, why did I even take that trade? And most of the times after a win, most people usually increase their risk. So we always saying keep the same risk variable. Do not change your risk around. Keep the same risk variable. Come to your trade, have a neutral mind, be like a robot. Enter your buy, take your win. Yes, it's a win. It's another day at the office. Come back tomorrow, hit another win. Yes, it's a win. It's another day at the office. Come the next day, hit a loss. Yes, it's a loss. Another day at the office. Nothing should phase you. Wins or losses shouldn't phase you or like spike your heart rate in such a way that when you're winning, your heart rate is going so fast. When you're losing and you are so sad, you even, you know, I'm sure we've all been through that. So what I would say is practice emotional detachment. All trading setups are just probability. What is the probability of price going up um, compared to going down? What is the probability of price coming down compared to going up? That's all we are trading, probabilities. Waiting for a price to get it to where we want, then executing after we see any entry triggers. Proper risk, proper reward, let the trade run. At halfway towards your target, always take something for yourself. If you're targeting for 3%, maybe take 1% off, move your stop loss to break even, then let the remaining positions run. That way, even if the trade comes back and takes you out a break even, you are content because you've made something from sitting on the charts for 3 hours waiting for that setup. At least you took out something. Be it a small amount, be it a big amount. as long as you've planned the trade, it becomes a little bit more easier. Also, use risk management. Use stop losses, use proper positions sizing to stay in the game. Like what I was saying, using different risks on different days, it only messes up with your capital because you'll find out the day you have a bigger risk is the day you have a loss, right? So tomorrow you come back, now you've got a smaller risk and you have a win, but that win is not enough to actually cover the loss which you took. And even if you take another small win, still is not enough because your risk variable is not the same. So to fix that, make sure your risk management is on point. Your stop loss is there, your position sizing is there. Platforms like your Match Trader and Trade Local, those are easy platforms which help you with your position sizing because you can easily put your risk 1%. It shows you the monetary value and it shows you a reward. It's quite easy to use. Then if you are trading synthetics, same thing. Depending with your account size, have a fixed risk variable. This week, I've got $50 in my account. I've got 5 trading days. Each day I'm going to come to the charts with $10 to risk. I risk $10 today with a 1:3 risk to reward ratio. Let's say 1:2 risk to reward ratio. So I'm risking $10 to make 20. The first day I take a trade, it's a loss. I lose $10. My account is on 40. The next day I lose $10. My account is on 30. Day number 3, I win $20. I've recovered my loss for the past 2 days. My account is back to break even. Day number 4, I take a win. My account is on 70. Day number 5, I take another win. My account is now on 90. Already you can see the reward, rest to reward based on those trades. So you win 2, you win 3, or you win, at least your win has to be able to recover what you've lost. So on average, we usually use a risk to reward ratio of 1:3. Anything above is just an added bonus, but a 1:3 risk to reward ratio is the default for us as day traders following this system, tried and tested based on the entries I always show you guys. It's tried and tested. So you should also build your confidence, track your trades, review your mistakes, and refine your strategies. Right? Simple is that you want to track your trades. After your trading session, spend 30 minutes, not even 30 minutes sometimes, because if you're trading like a few things and if you've taken one trade or 2 trades, it will take you less than 10 minutes to analyze your trades, take screenshots, write notes if you have to. You know, it it's all those small things which actually help um make your trading journey a bit more exciting and a bit more easier. Right. So what you want to do, track your trades, review your mistakes. I love MT5 these days because you just click your trading history. At the end of the day, you will see where you took your buy or where you took your sell. You will see where the trade closed, whether it was a stop loss hit or you take profit. That helps you check the price action on the time you entered. You check how the price moved, where you exited. Then you have to take notes of what you can do better next time. Whether it's a win, if it's a win, you want to do more of what you're doing when you win. If it's a loss, you want to write down the mistakes so that you don't repeat them. Just as simple as that. Doing those small, simple things on a day-to-day basis or on a daily basis can actually help your trading journey as well. And again, you also need a mindset shift. Most of the people who come to trading, they come looking for get rich quick schemes. That's why you see most people over leverage. Anytime you find yourself going in with a big lot size, just know that you're going for short term and not long term. What has happened to all the short term businesses you've seen around your area? You know, anything short term is always short lived. Yes, you want to go in with a big lot size. Yes, you want to make a lot of money with that one setup. But what happens if that one setup is the one which is going to hit the stop loss? What happens then? What happens if you're trading a fundamental news event and you know that you can easily get slipped? There is slippage. That means your stop loss is really not going to work. You're going to get filled at a wrong price. than where your actual risk is. You want to make a lot of money with one fundamental news event, not knowing that a month has got 20 trading days, right? You're putting all your risk, all your account on one day. Okay, what's going to happen on the next 19 trading days if you blow your account today? Those are some of the questions you just need to ask yourself. Like, what's really am I doing if I'm risking my whole amount on this news event? I've got 1,000 rands on my account. It's NFP, it's core CPI. I'm going in full margin. If I'm right, yes, you make money, but can you sustain your trading doing that thing? Going in full margin and risking your full capital. That only leads to bad habits because once you do it two, three times, it becomes like interesting because sometimes you're going to hit a win. It's going to make you a lot of money. But if you think you're going to do that on every fundamental event, trust me, these markets will show you flames. So rather protect your capital. If you're going to trade a fundamental event, okay, rather go in with a calculated risk. Risk only 100 rand out of that 1,000. Risk only 200 so that if it's a loss, you still have capital to trade the rest of the days. Most of the people are short-term minded. Like I said, treat your trading like a business. This is your business. You want everyone with a business. If you were to ask you what business would you like to have, what dream business do you think you would like to do? Whatever business idea you think of, do you think you would risk everything in one day or in one week, or you would take it slow, day by day, gradually building your capital, gradually building your clientele if it's a business, because wherever a business is good, there's also word of mouth, you get more clients. Same applies to your trading. If you're following your trading plan and following your rules, at the end of the day, what will happen is your capital is going to compound. Those small wins will add up and your capital will start to grow. Check your account in 30 days, check your account in 3 months, check your account in 6 months, in a year. If you're taking those small, consistent wins, you don't even have to wait for a year. Because if you're trading right now, you see you make $10 today, 20 tomorrow, 10 the next day, 5 the other day, 20 the other day. In 2 weeks, you've made $100 out of $100 capital. Already that's good returns because you've doubled your money. But people want to come with $100. They want to make $100 same day. They want to make 200, 300, 400, 500 out of $100 account on one trade. Like, where do you see that happening, guys? So don't be fooled by the internet. Yes, money can be made through trading. A lot of money can be made. But you don't just make it through one day. Everything which lasts needs to be built slowly but surely. Let your capital compound until you get to such an extent whereby your 1% risk maybe it's $1,000. Your 1% risk maybe it's $10,000. So now if you take one good trade, you are done for the whole week, even for the whole month. Have that long-term focus. Plan in long term. Okay, I've got a three-figure account. What's my goal for this year? I want to take my account maybe to 5 figures. Work towards that daily. Small wins, small wins, small losses. A big win will come here and there. But small wins, small wins, small losses, break even. Small wins, small losses, break evens, big win. Small wins, small loss, small loss, big win. Break even, small loss, big win. You see, just like that, your capital will compound. And also don't forget to pay yourself. For every trade you take, you also want to take a small percentage, especially if it's a winner. As much as you're compounding your capital, you also want to pay yourself. If you can pay yourself after every profitable trade, it's perfectly fine. If you can pay yourself every week, that's perfectly fine. Do not wait to grow your account to a big size before you can pay yourself, because what will most likely happen is you're going to blow that account without even making a single withdrawal. So no matter how much small a withdrawal is, we trade in dollars, especially for those in African countries like myself. If you make a few dollars, couple of dollars, withdraw that money, do something with it. Because even the smallest of dollars can do something if you're in Africa or if you're in any of the third world countries. Start small Let those small withdrawals like motivate you, things like that. Then success in trading isn't about being right all the time. It's about managing your emotions, staying disciplined, and executing your edge flawlessly. Your trading edge is something which you develop after the fear part. So after you stop being scared of trading, that's where you form your trading edge or a sixth sense. It's something which you actually have to resonate with on the charts. You see, when price is moving, you will see something which will show you that, okay, this is it. This is my setup right there. This is my pattern, right? So even here, you see setups are present every other day. Execute when you see them. Be confident enough to execute. Excuse the spelling there, but be confident enough to execute your trades. Wait for your buyers. Check where your price is trading. Which side of the moving averages are you? Is price on your point of interest? Yes, it is. Wait for your retracement if it's a bit far. Take your trades, take your pips. It's just as easy as that. Flip zone buy on yesterday's low plus 50 EMA. You see, these are what I call flashcards or just screenshots basically of some of the trades I took or some of the setups I saw when I was back testing. So these patterns, if you notice all the setups I was showing, the setups almost look the same. If you're buying and price is bouncing off yesterday's high, what are you waiting for? You don't want to take your buy at the top here. You want to wait for a retracement either into the 13 EMA or into a point of interest. For example, here we had the previous day's high. So our setup starts here, close above the 13, we push up, we retrace, and we get pin bars, multiple pin bars. That means on this particular trade, you literally had 1 hour to choose where exactly to enter. Enter your trade, hold. You can see this was just a clean push up. So it's all about patience. Patience, planning your trade. Patience, planning your trade. Regulating your emotions. Having the same risk variable. Showing up every day. You don't have to trade every day, but you must show up every day. If you're a day trader, if trading fascinates you and you want to make it to the big league, show up to your charts every day. Just pick a session. Show up every day. Check what's happening on your charts. Is there anything you can trade? Mark your charts, mark your points of interest, and wait. If something familiar presents itself, execute. If there's nothing familiar on your charts, that means there's no trade for that day. You've showed up, you are present on your trading, you are checking price. But if there's no entry, or if there's no anything, if there's nothing familiar or any setup criterias, then there's no reason for you to be punching buttons and trying to force a trade. Fear of missing out. Just be patient. Go through the course. It's got everything you need. Try to keep it as simple as possible. The moment you feel like you're analyzing and things are starting to get complicated, step away from the charts. Allow yourself to breathe, calm yourself down, call it a day if you have to. Come back the next day fresh, refreshed, look for a setup, execute if it lines up with your rules, plan the trade, and trade the plan. That's all I gotta say about psychology, guys. I hope your trading journey will improve this year. 2025 is the year. I need to see testimonies from you guys. I've got a plan to create our own funds to fund our own traders. So if you go through this course, and because most of the times we'll be sharing results, I'll be checking up on you. I want to form a certain how do I put this? I want to form a certain fund whereby if you go through the course and your trading improves, you get what we call in-house funding. Funds which is coming from you as students. We trade them, we multiply it, we give it back to you to trade again. So if you come, you're serious enough, you trade, you go through the course, you practice, you good, you get a funding. So since right now this is the beginning of the project, maybe our funding will just start from like $1,000, maybe all the way up to 10K for the good traders. Then we trade together because if especially if we are trading the same strategy of or if I see that you're actually understanding price the way I want you to understand it, it becomes easier for me to trust you with capital so that you trade, you take your profit share, and after we share profits, the a percentage comes to you, a percentage comes back into the company so that we keep growing it. That way, I feel like this year can actually be worthwhile for everyone. So all the funds which people pay for the courses, we still trade that money. And once we grow it, we give it back to the traders who actually deserve it. So that also shows you if you are serious about this, it can actually turn into a good profession for you, not only for the funds which you want to provide, but for you as an individual. You can get funded by prop firms, there's more money there. You can get other opportunities to even grow your own capital if you already have it. You can trade big numbers, make good profits. So this is just one of our goals which I have. All the monies we get from the services we are offering, we just want to give it back to you guys so that you can actually trade bigger accounts, make more profits, keep most of your profits, and give us back a small percentage so that we can keep growing that in-house fund until we can fund bigger accounts for everyone. That right there is the goal. So enough about that. I hope you guys this trading thing works out for you. It's my goal to see us all win, to see us all succeed. You know, have all those car meets, meet for lunch, meet for breakfasts at affluent places, you know, do those road tours, have seminars, you know, as traders. We just need to show that we are serious enough and we want this bad enough to actually prosper and change our lives and the lives of our families. I think that's all for psychology, guys. If you watched until the end, thank you so much. It shows that you are dedicated to this trading thing. If you watched until the end, it always shows that you are dedicated. Because if you love something, you want to put your all into it, all your time, your effort, you want to put it into that thing. So this is all for this lesson. Let's meet on the next lesson. Enjoy the rest of your day. Good trading.